Hello, everybody. Ed Yardeni here. It's July 28th, and aren't we just having a whole bunch of fun, right? The market's doing well. My phone is telling me that I got some messages, and it's sunny outside. Hope you guys have all had some good summers so far. There's still some left. It's amazing how quickly the summer's gone by, at least for us here in Long Island. We still have, I guess, August, but before you know it, it'll be September, October, this Christmas and New Year's, and again, things are happening pretty quickly here. We are going to have a special guest, Jim Lucier. We're just trying to get him in here, and he will be in shortly. But in the interim, I was planning on starting out with some kind of the usual overview that I try to provide you folks on a weekly basis. Well, what can we say? Trump is on a roll here. We've had, I think, 33 deals now where the administration has managed to get trade frameworks, agreements of some sort. These are not treaties. These are sort of works in progress. But I've been saying for a while here that I thought that the tariff issue would be more or less behind us by the end of the summer, and that seems to be the way it's progressing. Obviously, April 9th was an amazing day. April 8th, we made a low in the correction. Then April 9th, the president postponed his tariffs. The markets started to understand that a lot of what we were hearing was in terms of the blusters and the bullying and all that, that a lot of that was deal making, and that's maybe it's not a pretty thing to watch, but it seems to have worked at this point for the president so far. And I did argue that one way or another, Trump would be declaring victory by the end of the summer on these deals because he's got to move on to other issues. And in particular, I think he's going to have to free up some space, some time to go on the campaign trail and do what he can to keep the thin majorities that the Republicans have in the House and the Senate. So we'll see how all that goes. But the market was anticipating apparently the the European Union deal. It's up, but it's not up dramatically. It has been up dramatically on some of these deals on the perceptions that this issue is getting resolved. Well, now we go to some more mundane issues like what about the Fed? The Fed meets, and on Wednesday we're going to have
Yes,
some announcements. Hey, Jim, how are you?
it is. I'll let you go.
Good. All right, yeah, just listen in, and then in a few minutes
I saw you pop up for a second there.
Okay, yeah. Oh, yeah. You disappeared. Can you put on your video?
No, I'm here.
Oh, okay, good. Okay, you can go back into.
I'll let you go. Yeah.
Yeah. Okay. Thanks. You can turn it off the video, and then I'll get back to you in a minute.
Thank you. Sorry.
Thanks again, Jim. Anyways, the Fed, our view is that with all the pressure that's been put on Powell, with the ambiguity of some of the data, I mean, you could still argue that the economy is in a soft patch. It's hard to argue that it's going into a recession, and you could still argue that there isn't a lot of evidence so far that the tariffs are going into inflation. On the other hand, you could still argue that, well, wait a few more months and you'll see it there. But I think the FOMC, I think Powell's going to want to get a consensus. He's not going to want to have two dissenters, and he might be able to convince them that he'll, provide some dovish language in his press conference, signaling that a September rate cut is likely if all goes well on the data. And that might placate Waller and some of you can help me out here. The Bowman is the other possible dissenter. Both Trump appointees, both have said that have indicated that they would have been inclined to lower rates at this July meeting. What else is there to talk about? Well, the economy continues to be quite resilient in our opinion. The week ahead, we all know, is going to be a big one for lots of economic indicators. Meanwhile, we're still sticking to our roaring 2020 scenario for the decade. It's gone pretty well so far. We think it's going to continue to go rather well. Let me share some of my screen with you for a second, and we'll look at some charts really quickly. I'm doing this a little faster because I definitely want to spend quality time with our guest. But GDP all-time record high. The last recession we had was here with the lockdowns. For all the anxiety about a recession, we haven't had one. The economy has proven resilient. We've had a pandemic. We've had supply chain disruptions. We've had inflation. We've had the Fed tighten. We've had tariff turmoil. And yet here the economy is still managing to crank out the record highs in real GDP. The GDP number for the second quarter that'll come out this week, we expect to be up 2.4%, the same thing as the Atlanta Fed number. Meanwhile, the stock market has also been basically confirming the roaring 2020s. Actually, it's been doing it for a while, but we think the market will end up at 10,000 by the end of 1929. So the new decade, the 3030s, will be sort of the next issue in terms of thinking long term. But we don't see any particular reason why the 2030s couldn't be the roaring 2030s as well, just like the roaring 2020s. The 1920s came to a bad end, obviously, with the Smoot-Hawley tariff. We're stress testing the U.S. and global economies now with lots of tariffs being discussed and imposed. But all in all, it doesn't look as though this is having anywhere near the impact that the Smoot-Hawley tariff had. And again, we think this too shall pass. It looks as though Trump basically wants 15% now in the baseline. If he gets his baseline of 15% plus a whole bunch of other tariffs on steel and aluminum and things like that, I think he'll be able to collect something like $400 to $500 billion at an annual rate. And he'll certainly point that out as a success in terms of narrowing the deficit. And I think we'll have to give him credit for it if, in fact, the tariffs don't cause major economic harm to the U.S. or global economies. And so far, that doesn't look like the way it's going to play out. So this should be another roaring decade. And this chart just shows that actually a lot of decades have roared. Certainly the 20s. We had a pretty good roar after World War I, 1949 to 59. That was a roaring good time in the stock market for sure. And the assumption here is that reflected the underlying economy. And then we can see these other decades. Again, we're aiming for 10,000 by the end of the decade. We've discussed that before with you. Technology capital spending is continuing to boost business capital spending. Technology capital spending is less interest rate sensitive than non-tech capital spending. A lot of this has been going into technology related to AI and data centers. And so we've had the semiconductors doing very well. This is industrial production of semiconductors in the United States, and you can see that's taken off. We're not talking about any sort of recession whatsoever. Quite the opposite. We're accelerating the pace at which, and we don't produce NVIDIA chips. Maybe we produce some of them, but we don't produce the state-of-the-art ones that comes from Taiwan. This is high-tech capital spending in current dollars. We spend over $2.1 trillion, as you can see, and that's going. It's actually, that's not a mistake. That it actually jumped like that, and it jumped like that because we had a jump in information processing equipment capital spending. We had a jump in software. R&D kind of has stalled out here, but at a record high. So all the stuff that we're doing in our portfolios with technology and all that. That's all showing up in the macroeconomic data. 50% of capital spending now is high tech. It had been back during the IBM mainframe days, been below 20%. And again, we think tech is less interest rate sensitive, less prone to being cut back when things might be slowing down. Um, there were not lots, there was a handful of companies that led the roaring 1920s bull market. Same thing is happening now with the 2020s bull market. Magnificent Seven market cap, all-time record high. They account for 30% of the S&P 500 in terms of market cap. They account for over 22% of earnings and 12% of revenues. So obviously, they have a high profit margin. Uh, Consumers also less interest rate sensitive, perhaps because there are a lot of consumers who benefit from high interest rates, like the baby boomers. On the other hand, lower income, younger consumers probably get hurt. But on balance, the consumer continues to benefit from high interest rates. And you can see that, as we've shown you many times before, the consumer increasingly is made up of retiring baby boomers who have $80 trillion of net worth and they're spending it. This is a similar chart for household deposits and money market funds. And you can see that the baby boomers have about half of the money market funds and deposits. And so again, they're older and they don't mind high interest rates to the extent that they're benefiting from that in their money market funds. The younger folks have more of the consumer credit, and they're the ones that are suffering from that. But there is a lot of intergenerational transfers, in my opinion, between the baby boomers and their kids, and I think that's also helping to keep the economy growing. Real wages are going up, as would be consistent with the productivity. Productivity, we think, continues to boom. It was down to 0.5 on a 5-year trailing basis back in 2015. We think that it goes from 2% up to 3%, maybe higher over the rest of the decade. And again, when you look at one measure of the standard of living, it's at an all-time record high. That's real personal consumption expenditures per household. That's the blue line. The red line is disposable income per household. But Americans, from a macroeconomic standpoint, have never been better off. Now, let me introduce Jim. Jim, why don't you come on in and let me get my other glasses here since I've got funky eyesight. So Jim is a good friend. Jim and I go back to Prudential days. I went off on my own, started my own company. Jim did the same thing. Jim is a founder at Capita Alpha Partners. He specializes in taxes and trade for 30 years. So obviously both extremely relevant today, always relevant. He's also known for his work in energy between tax bills. And Jim has been at Capital Alpha for 17 years, which is, I think that's how long Yardeni Research has been around. You and Chuck Gabriel were the sort of the go-to guys at Prudential when it came to Washington research. I never felt any need for Yardeni Research to have Washington research because you guys are very generously provide us with your research, and we tap your minds and often quote you guys. And I'm very impressed with the work you do. And Jim was one of the founders of Capita Alpha. So Jim, thanks for that. I thought we'd have a discussion on that note that you wrote. We did share your note, and thank you for allowing us to do that with our accounts, and got a lot of very good feedback on how impressive that was. Give us a kind of a rough overview. Everything's going just great for Trump, but it seems, at least on the trade side for sure, and the stock market for sure. Any setbacks up ahead here if this tariff issue gets blown out of the water in the courts?
Well,
It's always a privilege to sit at the feet of the great Ed Yardeni and just some poo. But we do
Thank
have
you.
something that investors need to pay attention. You mentioned 33 trade deals. Trump has sent letters to countries informing them of tariffs. He's just signed this big trade deal with the EU over the weekend, a similar big deal with Japan last week. But all of these trade deals are based on one thing, and that is Trump's use of a 1970s law, the International Economic Emergency Powers Act, a Nixon era bill that he claims gives him the ability to declare tariffs anywhere, anytime, on anyone. He can adjust them up, he can adjust them down. He has total control over the command of tariff policy. And that's something that no president has previously claimed. So it's a new idea. And to the extent it's been litigated, we've had two federal court rulings. And these are both very serious courts. The DC Circuit, I should say the District of Columbia District Court, ruled that Trump's IEEPA tariffs were unlawful and unconstitutional. But more importantly, the specialist federal court for international trade, the Court of International Trade in New York, ruled 3-0 that these IEEPA tariffs were unlawful and unconstitutional, and it enjoined Trump from doing them in the future. So the problem Trump has here is that if another court, if an appeals court like the Federal Circuit Court of Appeals, which is hearing oral arguments on Thursday, if another court says these tariffs are unlawful, every single one of these trade deals is going to fall apart.
Does it really fall apart? I mean, can't all of the countries that he's negotiated deals or frameworks, can't they all say, well, we voluntarily agree to these anyways? Or I mean, are there ramifications really like what you concluded that they fall apart?
Well, I think the most obvious thing here is that you have to go for a redo. The deals are all based on the idea that President Trump unilaterally can impose a 15% tariff or a 25% tariff or what have you. Now, it could be that the other countries could stick to their side of the agreement, and Trump might suggest that if I can't use IEPA, I would use Section 232 or Section 301 or some other statutory tariff. There's some idea that maybe Trump would submit these agreements to Congress and try to get Congress to approve them also. It's certainly not as if Trump has no options. He's got options. But what we do have is a messy restart after the initial plan to use this 1970s emergency statute. Once that falls apart, you've got to come up with a replacement, and there's really no plan B right now.
Well, there, isn't it, can a similarity be had with the executive orders? I mean, presidents have taken more and more power through executive orders, and they issue so many of them that by the time the courts get a hold of them, the administration's moved on to other issues. But do we have the same kind of possibility here? I mean, who's actually going to blow the whistle? So the court says he doesn't have that power, and he says, "Well, that's nice, but I'm just making deals with these various countries, and they agreed to stick with him." I mean, if anybody starts to go legal on him, if Japan goes legal or Europe goes legal on him, he'll let them know that he'll straighten out the powers that he needs to do this, and he'll remember them for backing out on the deal. So I'm just trying to assess whether the market's going to freak out over a court ruling, or whether suddenly there'll be a lot of commentary coming out of the administration and CNN and the Fox and everybody else saying, well, there's all these other options.
Well, I think the market has already factored in the possibility that these tariffs have a dodgy legal basis. I don't think the market's going to be surprised. I'm certainly not the only one out there who is pointing out that two federal courts have already ruled against the tariffs. The problem is that on tariff authority that is raising revenue. The constitutional authority rests in Congress. Only Congress can raise taxes, only Congress can raise tariffs. And Congress has delegated tariff authority to the president in certain circumstances. And if the president were to fall back on his Section 232 or 301, even 122 authorities, he'd be able to do some kind of tariffs. The problem is that these other tariff authorities require investigations, a longer process, and they're just not as flexible to say, hey, you get 15, you get 25, you get 19. Trump needs a fallback position. And it's going to be difficult to renegotiate these deals when, to some extent, they represent, I would argue, coercion, intimidation. I can tariff you any way I want. And suddenly it turns out that, well, he didn't have that authority. Now he's got to come back. But I think there's going to be a loss of credibility and certainly a loss of time when you have to go back and put the pieces back together again.
So in other words, it could get quite messy in this scenario.
It could get messy, certainly.
Yeah, and Trump, I think, was anticipating that. I think he went from 10% to 15% on the baseline because he kind of likes what's happening. Money's coming in, and right now it's coming in at a rate of about 350 billion at an annual rate. If you go to 15%, I guess he's looking at 400, maybe to 500 billion, because that's not the only tariff. But how about the specifics of the tariffs? Does it really, do the tariffs matter in terms of the differences? There's the baseline tariff of, let's say, 15%. And then there's the tariffs on steel, aluminum, autos. Are they different from a legal point of view, or once
Oh,
it's
they're very, very different. The baseline tariffs and the reciprocal tariffs, let's say your 10 or your 15%, those are based on IEEPA, the International Economic Emergency Powers Act of 1977. But the steel tariffs are under Section 232 of a different trade act, the Trade Expansion Act. That's a national security industry sector tariff. And those are probably rock solid. So if President Trump can't use IEEPA, then he can say, well, I'll do a steel tariff, I'll do an auto tariff, I'll do a pharma tariff, I'll do these industry tariffs. And so he does certainly have the toolkit that could build a tariff wall around the United States. But if you have to do it slowly and do it sector by sector, it's just very difficult to find a one-size-fits-all approach for all countries.
well, you said slowly, but I didn't see anything that was particularly slow about steel, aluminum, copper, autos. I mean, he just kind of waved the wand and said, "This is what it is." In what sense was there any process of investigation that you, I think, mentioned?
Well, with autos, there was basically a one-year investigation that concluded in 2020, and Trump never invoked tariffs going into COVID. So what he did with the auto tariffs is that he had an update for that study. And so that he was able to move quickly on the auto tariffs based on the prior study that was done. Now, legally, that could be attacked because there was a timetable and a deadline for doing these studies, and that was really cutting corners in the process. With regard to the steel tariffs, Trump spent nearly a year doing that investigation back in his first term. Now, it's going to be interesting to see how quickly he moves on semiconductors and pharma. Supposedly, those are coming out in a couple of weeks. The historical process to impose these tariffs has been a 9-month investigation, followed by a 3-month period for setting the tariff. You don't have to use that time, so Trump can move more quickly. But still, we're talking months instead of instantaneous. It's a little more difficult to use that other authority.
And by the way, we have a very large audience, and I appreciate that, Jim, you joined us, and obviously you and the topic are a big draw. And now I was going to ask for some questions from the audience, and so go ahead and type away and put some of your questions in. I see one came in here, and that's from Joe. Jim, were you surprised that the EU did not impose a tariff on U.S. exports into Europe, or is it because of the services components being so high?
Well, I think the EU just wanted to get this over with. I think they were happy to have the 15% rate. You know, that the EU, that one thing that is not addressed here is any of the digital service taxes, the European regulations on US technology, European pharma costs, which are lower than the US, and a lot of other non-market issues. I'm surprised that Trump didn't bring those up too. Um, Also, I think that if Trump has this authority under IEBA to retaliate, I think the Europeans have been very careful to avoid a cycle of retaliation. Europe has been studying what they've been doing or what they would do for over a year now, and I think that their instinct has been that caution is better rather than escalate with Trump, but just establish one tariff rate and let that be it.
What form are these agreements in? I mean, they're clearly not treaties, so it's like a 5, 10 page document. It's a 90-page document. Do you have any clue on that?
Well, at the moment, there are zero documents. There are posts on Truth Social. The US UK treaty document is the only one that I think we actually have. That is literally 4.5 pages. So it's more of a heads of agreement, a talking point sort of thing. Um, I know that our friends in Japan are very anxious to see the text of whatever the Japanese government agreed to. And the fact is that we really don't have a lot of details on these agreements, and they're probably more of an agreement to keep talking than to do anything definitive. They're not like other trade deals, which are hundreds of pages long and very, very detailed.
Question from Cactus. Thanks, Jim. What is the timeline for this upcoming court ruling, please? How much, how much we find out on, how much do we find out on Thursday, and how much is left for later and when?
Well, we hear oral arguments at 10 o'clock on Thursday morning. This is a court that typically takes between 1 and 3 months to decide. The courts have been moving very quickly. District Court in the District of Columbia took 2 days from oral arguments to its ruling. The Court of International Trade took 2 weeks from oral arguments to its ruling. So I think it's probably a good bet that we get hear from this court by September. August would not be impossible, but I think we'll hear in September.
Okay, Kevin wants to know, what do you think the bottom line and ultimate outcome and the timeline on these? Second, what is the economic fallout and the EPS fallout for Wall Street? Uh, I think you kind of talked about the timeline, right? Uh, do you have any kind of end game to all this, or it's just too hard to game?
Well, it really depends on whether or not the Supreme Court takes this up and whether the Supreme Court puts it on its calendar in October for a decision in July next year. So if this gets litigated all the way through the Supreme Court, we're really not seeing a resolution until then. But if you follow what the court is doing at the appeals court level, the Federal Circuit seems to be setting up an en banc hearing. That's 11 judges all at the same time. By the way, 8 of those are Democratic appointments and only 3 are Republican. I think that the Federal Circuit would like to do such a definitive ruling that they'll settle the question one way or the other in September, and ideally give the Supreme Court an out so the Supreme Court won't need to pick it up. But you can bet that Trump is going to try to litigate it as long as possible.
Yeah, Kevin, with regards to the second issue of the economic fallout and EPS fallout, obviously that's my bailiwick, and it's great questions. Depends on how messy the situation gets, I suppose, and what the responses of countries that we've negotiated deals with, um, and and I guess the deals can be amended on social media. We'll see how that all plays out. But I don't have a good answer for you at this point. But I have, like everybody else, I have to see how it plays out. But my sense is a lot of this will turn out not to have that much of an economic impact, especially if the tariffs are put on ice or on hold, or the president has to kind of back off. So we'll see how that all plays out. But I'm still betting on the resilience of the economy. As I mentioned before, it's put up with a lot of stress tests in the past few years and passed them all. Chip, Jim, as per your comment, if courts continue to rule against the tariffs, all trade deals may fall apart, creating significant uncertainty for businesses and markets. Is there a silver lining?
Well, there is a silver lining. One silver lining is that tariffs would have to be refunded. I think that investors are going to be very interested in seeing the process by which those tariff dollars would be refunded over the course of the coming year. I think also one thing that markets have had trouble with is just the whirlwind nature of these tariffs, ups and downs, shifting deadlines. If President Trump has to use legal authorities, statutory authorities that have a more defined process, I think we'll probably still have tariffs, but it would be done in a much more structured way. And I think markets would probably appreciate that too.
Well, Chip actually makes a great point because one of the questions I asked you was, okay, so the courts rule against Trump, so what? So he just ignores them, and the other countries say, we negotiated in good faith, we're going to stick with the deals. But what could really be a problem here is that companies that have paid tariffs could have their legal departments start writing letters to the Treasury and saying, we want our money back. I mean, that's what they would have to be doing, right?
That's already in the litigation.
And not only that, but they could say, that tariff the duty that we're supposed to pay, we're not paying it. I mean, you don't have the legal right to tax us like that. So that would also be the case, right?
That would be the case. You'd want a final ruling, whether it is from the Federal Circuit and the Supreme Court decides not to take it up, or the Supreme Court might take longer to settle it definitively. There is a year-long process where tariffs can be adjusted so that in the event of a misclassification or some error in applying the tariffs, you've got this adjustment. So there is a process by which refunds can be offered. It's just never been, an opportunity to offer refunds on this scale.
Here's an interesting question from Lee. It would seem that most of these agreements contain not only an agreed to tariff, but also an agreement to invest foreign funds into the U.S. Does that not open the concept that it is not an emergency tariff, but a reciprocal economic agreement?
Well, yeah, that's an interesting legal idea. Can you have an agreement with the government of Japan whereby the government of Japan is guaranteeing or committing $550 billion in investment in AI and semiconductors or whatnot? That does sound an awful lot like a treaty that would require the Senate to approve it. On the other hand, I think the way that most media sources, the way the Japanese are reading the treaty, is just an aspirational target of investing in these sectors. Japan already invests a lot of money in the U.S., as Europe does. So this is not necessarily a lot higher than they would have been investing anyway. So there's this open question. Is this something that would be equivalent of a sovereign wealth fund for the U.S.? Funded by a foreign country? If you saw Lutnick's interviews over the weekend, that's what he's saying, and yet no one else seems to understand how he can support that claim.
So the next step is when is Thursday is not the definitive decision, right?
Thursday is the oral arguments, and the entire court is sitting to hear the oral arguments. They start at 10. They should run through about 11:30. With 45 minutes of argumentation on either side. As I said, I think this court sees the tariffs accumulating at $400 a year, $400 billion a year, $25-30 billion a month. I think they do want to move quickly to provide some kind of certainty on how quickly they move. So I think that we could see a ruling from this court in September, and then it's a question of whether the Supreme Court picks it up or whether the Supreme Court declines to hear it.
I'll ask you a last question, and that is back to this question about investments. So there have been a lot of commitments made by countries and companies to reciprocate by investing more in the United States. The question then is, are those like in writing, or is it the same thing? It's just verbal commitments. What do we know?
Well, clearly what you have is some kind of written agreement, whether it's just a hints of agreement. They're expressed by the governments. So I think that you need to look at the US side and the foreign country side of these agreements. On the US side, there may be a problem with whether or not the US can actually impose the 15 or 25% tariff. But on the other side, with the European or countries or Japan or others saying that we'll grant you this access to our market, to the extent that's within their control, that will offer more access for these sectors, that will make these investments, that will buy your LNG. There was no reason why the foreign countries could not continue on those commitments as a sign of good faith. And I think that many of the positive aspects of these deals will continue because, frankly, they are to some extent in the interest of the people that made those deals. The part of the deal that won't continue necessarily is the 15% tariff under IEEPA. So the US will have to figure out what their fallback position is.
Well, Jim, thanks so very much for joining us. It's now that everybody's kind of become complacent and enjoying the summer, we got something to think about right up ahead here. Folks, again, I can't say enough good things about Capital Alpha Partners. We've picked their brains many times on tax issues and other issues that are relevant to the macroeconomy, and you might want to try out their service. Thanks again, Jim. Enjoy the summer.
Thank you, Al.